Hey, my name is Connor, and welcome to Crypto Empire, where we dominate the crypto markets. In this video, I'll be showing you how to use the Bybit exchange. Bybit is a very popular and low-fee cryptocurrency exchange that allows for both spot and leverage trading. So in this video, I'll show you how to navigate the user interface of Bybit, how to deposit and withdraw your assets, and then how to trade spot, and then of course, futures trading with leverage. So if this does interest you, then be sure to stick with me until the very end of this video. And if you're new to Crypto Empire, go ahead and hit that subscribe button down below, smash the like button, comment, and turn on all bell notifications so you don't miss any future videos. And let the gains be with you. So the first thing you're going to have to do to start trading on Bybit is of course create your account if you don't already have one. So go on over to the link down in the description and you can use my link. You will get some bonuses if you do want to do that. Regardless, it is non-KYC, so you don't have to give up any of your personal information to make your Bybit account. Once you do make your account, you're all logged in, you confirm your email, etc. What you're going to want to do is set up two-factor authentication. By the way, I do strongly recommend that you use a VPN service at all times when you do trade cryptocurrency. So after you create your account, you're going to want to set up two-factor. So over here on the top, you'll see this little person symbol. Now account and security is what you're going to click on. And after you click on account and security, you'll see down here it says Google two-factor. You're going to want to make sure that is enabled and you set up two-factor authentication for your account so it is kept safe. Now after you created your account, you set up two-factor, you're going to need to get some money, some funds into your account. So you have two options for this. You can either buy crypto right on Bybit with your money in your credit or debit account, or you can send in cryptocurrency that you already own from an existing wallet of yours. So if you want to buy crypto, it's over here in the top left, and it's going to take you to the purchase crypto screen. And as you can see, you will select your currency that you do want to buy it with. So you wanted to buy $1,000 of Bitcoin, and you can only buy Bitcoin, Ethereum, and Tether on Bybit. So after you put in the amount you want to buy, you would essentially use one of their third-party service providers to go ahead and get the money in your account. You would hit buy, and you're going to have to pay some extra fees because this is a third-party provider, and they need to get their cut. They're the middlemen, right? So that is how you would buy crypto on Bybit. However, me personally, I do just like to send in assets that I already own. So in order to do that, over here in the top right, it will say assets. You're going to want to click on that. This is going to take you to your account balance screen. So in order to deposit funds into your account, over here on the left side of the screen, it says deposit. You're going to want to click on that. And as you can see, you can select Bitcoin, Ethereum, EOS, XRP, or Tether as your assets to deposit. So let's say you wanted to deposit USDT into your account. You have three options for the blockchain to send it through: the OMNI, Ethereum, and Tron blockchains. I would recommend to use Tron, TRX, because it is the cheapest. However, whatever works for you, right? If you have your funds in MetaMask on Ethereum, then you're going to have to use ERC20. So please note that, right? Send it on the correct blockchain. This is your address, or you can scan the QR code, send it into your account, and we're on the screen right now. Over here in the bottom, it says spot account or derivatives account. So your spot account, spot trading, if you didn't already know, is when you are buying the asset one for one. You're using the money you have, you're trading the money you have to buy the exact amount of that asset that you have the money for. Leverage derivatives trading is when you actually go into debt to open up a position. You borrow money from the exchange. I'll be showing you how to do that later on in this video. You can go up to, I believe it's 50x leverage on Bybit, which is quite excessive. If you're a high risk taker and you like living life on the edge, maybe that's for you, but this is not financial advice. So we're going to deposit that into our spot account, and we're actually not going to send anything through right now. This is just how you do it. As you can see, I do have a little bit of BTC in here. 550,000 Satoshis. We'll see where that value does actually end up in dollars in a few years' time. See if one sat actually does equal $1, right? That would be awesome. Regardless though, that is how you get your money into Bybit. So now moving on, I'll show you how to trade spot. So over here in the top, it will say spot, and you'll click on spot. It's going to take you to the spot exchange now. So if this is your first time looking at an exchange, do not get confused. It is really pretty simple what's going on here. Over here on the left side of the screen is where we see our trading pairs. We either have USDT pairs or Bitcoin pairs. The only Bitcoin pair available to trade is the Ethereum Bitcoin pair, which is trading for 7,037 Satoshis right now. And then there are the USDT pairs, and there's 4 of those: Bitcoin, Ethereum, XRP, and EOS. So we're looking at the Bitcoin USDT chart right now, and that is in the middle here. So we can see it is a fully interactive trading view candlestick chart. We can change it to a line chart, change it back. We can change the time frames. It's fully customizable, right? We can draw. If we want to draw, we can do that. It's all there for you to customize and make it how you do want. I do my trading though on TradingView, so I just place the orders on the exchange. Over here we also do have volume, so it's a fully interactive chart, which is amazing. Also over here is where we actually go ahead and place our orders. We'll be showing you how to do that in just a second. And then over here on the right side of the screen, this is what is called the order book. This is what allows you to see where all of the buyers and sellers have their order placed. So we can see right here in the middle, this is the current market price. The current market price of Bitcoin is $46,138. And over here we can see that the sell order is $46,143, and then the buy order over here is $46,139. So there's a $4 difference about. And this is what is called the bid-ask spread. So if you do want to execute a market order, you're going to be buying the premium. You're going to pay a little bit more for a market order. And let me briefly explain the difference between a limit and a market order right here. So a limit order means you are a market maker. You are supplying liquidity to the exchange. For example, and by the way, you pay much less fees with limit orders because you are a market maker. This is the fee right here for spot trading. For a market maker, you're paying a 0% fee. For a market taker using a market order, you're going to be paying a 0.1% fee. So keep that in mind. It's really not that big of a deal. With that being said, a limit order allows you to place your order at a predetermined price before price is actually at that level. So let's say we wanted to buy cheap Bitcoin, for example, at $42,000. We would place a limit buy order at $42,000, and then when price drops down to that price level, our order automatically gets executed by the exchange. So that is a limit order. You can put in the quantity you want to buy. Let's say you want to buy 1 Bitcoin at 42K. You would hit buy BTC. And then your order would actually be waiting, and the second price hit 42 grand, it would execute and your order would get filled and you would have that 1 Bitcoin in your account. Same goes for selling. Let's say you want to sell Bitcoin at $100,000. So you would place a sell order, a sell limit order, and sell your 1 Bitcoin when it hits $100,000. The second price hits 100 grand. Bam, your order is executed. You now have 100,000 USDT and you don't have Bitcoin anymore. Now, a market order allows you to buy or sell at the exact market price. The exact market price, again, is reflected right here in the middle, $46,133. This is when you are a market taker, because with a limit order, basically, the exchange locks up the money that you're using to place the order and is using that as liquidity. So you're making liquidity for the exchange. As with a market order, you're taking liquidity because it is executed immediately with a market order. The second you hit buy or sell, your order goes through and you get the best available market price. Now over here as well, we do have conditional orders, which is very neat because it allows you to set a trigger price for your order. So let's say you wanted to trade a breakout, for example. Let's say you wanted to trade the breakout up here at $47,000. You wanted to go long, but you want to buy the retest of the breakout, right? What that actually means, looking at that trading view now. So let's say, we have this Bitcoin chart. Price is just going kind of sideways. We're going to wait for price to actually break out, and then we want to enter long on the retest before it starts going higher, right? So as a trigger, we could put our trigger at 47,500, for example, and then put our long order at 46.7K. So we would put as our trigger price 47,500. This means that our order isn't actually active until the trigger price gets hit. once the trigger price gets hit and price actually drops down to 46,000, I think we said like 700, then our order would actually get executed. So the trigger price breaks out of the little range it's in. It hits 47,500, and then it drops back down to 46.7. We get filled. Otherwise, we don't actually get filled, right? If price just exploded past the level and then never came back down to 46,700, we don't get filled. And if price never hits 47,500, we don't get filled either. So a conditional order does give you some more options when you are actually trading, which is great. Now over here in the bottom, as well as where you'll see all of your active positions, as well as your order history. So it's all down there for you to see. You can see all of your records. So that is how you use the spot exchange on Bybit. It's really very simple. If you want to go long or short, you put in the price level that you want to go long or short, you put in the quantity, and you hit the buy or sell button. Now moving on, I'll show you how to trade futures, derivatives. So Bybit is actually great because they offer you the coin marginated futures and the USDT version. Basically, this is the collateral that you use, and it is what you get paid out in when you do actually get a winning trade. So for the inverse perpetual futures, you're going to be trading the underlying asset. So either Bitcoin, Ethereum, EOS, or XRP. You're going to be using that cryptocurrency as your collateral. So Bybit is extremely popular for Bitcoin trading. So what this means is if I go long or short here on Bitcoin, the Bitcoin in my account will be used as collateral, and if I do win the trade, I will be paid out in Bitcoin. This is the inverse perpetual futures. We also have USDT futures, and there's quite a bit of trading pairs here for USDT futures. Basically, this means that we get paid out in Tether USDT, and we need Tether in our account to trade with collateral. So it's fully customizable, up to you which route you want to take. Like I said, Bybit's very popular for trading Bitcoin using your Bitcoin as collateral so you can get paid out in Bitcoin, which of course is more valuable than fiat currency because fiat is being deflated, or inflated I should say, into space, into the stratosphere. So we're going to be looking at the derivatives inverse perpetual Bitcoin US dollar pair. So now this is very similar to spot trading. However, the main difference is up here in the top right, and this is basically your leverage. So you do either have the option of cross or isolated leverage. Basically for isolated, it means that your collateral can only be used for this one trade, this one position. With cross, which is more popular actually, means that all of the collateral in your account can be used for all of your positions. So cross margin allows you to be more flexible because all of the available balance in your account will be used to cover the margin. With isolated, you need to make sure that you have enough isolated margin in your account to cover that position. So cross I'm going to go with right now because it's just way easier. And now for leverage as well, we can go up to 100x actually on Bybit. I typically go 5 to 10x. So you need to practice proper risk management. If you're new to leverage, I would honestly recommend not even going higher than like 2x. Personally, just sticking with spot. But like I said, I like to go 5 to 10x for my positions. So that's completely up to you, not financial advice. You'll hit confirm, and it will lock in your leverage. Now we're looking at pretty much the same exact thing. The chart is the same. The order book is the same over here. The only thing that's a little bit different now is where you actually go ahead and you place your orders. So it's, for the most part, very, very similar. So if you did want to set up a long trade and you wanted to buy Bitcoin at $42,000 at $100 worth of Bitcoin, this is how you would set it up. 42 grand for your order price, quantity $100 US. And now I always recommend to go long with your target profit and your stop loss already in place. You need to stick with strict trading rules, especially if you were using leverage. So I'm going to go ahead and check off the box where it says buy long with target profit / stop loss. That's what TP/SL stands for. So let's say we wanted to take profit at $50,000, for example. This tells us that we would expect a profit of 38,095 Satoshis. That's 160% ROI. And let's say we wanted to get stopped out if the trade doesn't go our way at $40,000. So this is a 4-to-1 trade, right? Because we're going to try to make essentially 8,000 ticks on our Bitcoin while we're risking 2,000. So that is how you would go ahead and set it up, and then you would go ahead and hit post only, because we want to make this a maker order, right? We don't want to be takers, we want to be market makers to pay less fees, and a good till cancel order as well. So we'll hit post only, and then we'll hit buy long. Now it'll confirm our order, saying that we're essentially in, we'll go long at 42 grand at $100. This is going to cost 20k Satoshis, I believe, with an estimated liquidation price of $12,718. What that means is if Bitcoin drops down to 12k, then I get liquidated. I severely doubt that will ever happen. I doubt we'll see 12k ever again in our life for Bitcoin in history. So we can see we're using cross 10x leverage as a good till cancel order, target profit, stop loss, all there. Okay, if you don't want to see these confirmations anymore, you can check that. You'll hit confirm. So now over here in the active tab, this is our order. Now once this does get filled, once price drops down to $42,000, it will be up here in positions. So that is basically how you go long with leverage on Bybit. You can cancel the order by hitting cancel. If you wanted to go short, it is the same thing. However, when you're short trading, of course, you want it to go down. So let's say you wanted to short Bitcoin when it hits the all-time high at $65,000 because you think it's going to get rejected for whatever reason. So for your order price, you would hit $65,000. You would put in the amount of US dollars that you want to sell of Bitcoin. You would sell short with a target profit and a stop loss. And now when you're selling short, you want your target profit to be lower than your entry price because you want price to go down. So let's say you want to take profit at 50 grand when you sell at 65 grand. So that's how you would do it. Then for your stop loss, you would want that amount to be higher than your entry price, right? Because when you go short, if price keeps going up, that means you lose money. So for your stop loss, it will be above the entry. So we'll say 70 grand, right? $5,000 above your entry price for the stop loss when you sell short. So you'll hit sell short and the order would be placed. When price does hit $65,000, it would actually go ahead and you would enter this trade. And if price dropped down to 50 grand, well, then you would be successful. And if price at 70 grand, well, then you would get stopped out. It's that simple. Okay, now reduce only over here. Basically this, you check this box off when you don't want to add to your position. I'll give you an example of when you might use this. Let's say you go long and you don't set a stop loss or a take profit order on your long. You just enter into the long position and now you just have an open trade with no target profit or no stop loss. You're going to want to put in sell short orders, right? But you're going to want to use reduce only because that means it won't actually open up a short. It will only sell the position you already have. It will only reduce your open position sizing. So that is what reduce only means. Super important that you know how to use reduce only because if you ever find yourself in a situation where you're in a trade without a stop loss, you're going to want to make sure you put in a stop loss so you'll hit reduce only. We also have conditional orders for trading with leverage. And it's really the same thing. Let's say the perfect example is you want to trade the breakout. Bitcoin's going to break out from 47 grand. So you would put your trigger price at 47,200, for example. You would put your entry price, you would want to use a limit order, right? Because you want to be a market maker. You don't want to just buy randomly at the current market price. You want to make calculated decisions when you're trading that are emotionless, stone cold. You already do your charting. You know with highest degree of probability how it's going to play out. That's why we are market makers with limit orders. So your trigger price is 47,200. When price drops down to the breakout level to retest the breakout, say at 46,700, you're going to want to go long with $100 worth of Bitcoin. And you'll set a profit target of $100,000 because you're going to ride this one all the way out with a stop loss at 42,000, for example, not financial advice by any means. And then you'll go ahead and you'll hit, make sure post only is checked, and you'll hit buy long. So now you have a conditional order. On other exchanges, conditional is known as a stop limit order. Basically, it's just a bracket order with certain conditions. Exactly what it sounds like. So we can see the order right here. Our entry price is 46,700, and that will only be entered after the trigger price is hit at 47,200. We have our target profit and our stop loss there. It's a limit order. It's untriggered at this moment in time. That is how you go about placing your trades in Bybit with leverage. So Bybit is a very popular cryptocurrency exchange because it does allow users to trade with both spot and leverage, and they do have a lot of pairs to trade leverage with if you do use USDT as your collateral. I did show you how to use Bitcoin as your collateral in this video, and I do definitely recommend using Bybit because it's very reliable, it's low fees, and it's not let me down. So if you did enjoy this video, make sure you let me know by dropping a comment down below and leaving a like as well. And if you're not already subscribed to Crypto Empire, go ahead and hit that subscribe button and turn on all bell notifications so you don't miss any future videos. And my name is Connor from Crypto Empire, and I will see you in the next video.